Good morning, traders. Stephen Davis, RJO Futures, Senior Market Strategist. Friday morning here in downtown Chicago. Happy Friday to everybody. Here to talk to you about the grain markets. Let's get to it. These are supply-driven bear markets. Prices are lower. Prices are trending lower. How low can they go? That's what everybody wants to know. You know, the ratios that they talk about soybeans to corn, it's 750 soybeans and $3 corn. There's no guarantee, but that's what the ratio says prices should go. Harvest. A lot of times harvest will get 50% done, and that's a telltale sign that the lows are in. Markets are forward-looking mechanisms. So right now the corn market's about 10% the harvest complete. Soybeans were just getting started, maybe 2 to 4%. So we'll talk to each week when this corn market gets 50% completed, the harvest. Perhaps then the lows will be put in. And the next 10 to 14 days, you're going to see a lot of harvest pressure. China bought corn from Bulgaria this week. Well, kudos for Bulgaria. But China buying anything is friendly, is bullish on the world market. That's what's going on here. We're trading lower to get our grains into a competitive stance with the rest of the grains in the world. China, their U.S. demand is shifting from our great country, U.S. of A., to Latin America. Cheaper prices there. So we'll follow this demand story along. Soybean markets. Soybeans gapped lower this week. We never went back and filled that gap. That is bearish. And last week's high in November beans was 9.99 and 3/4. Today's low 9.11. So we almost went from 10 to 9 in soybeans in 1 week's time. That's how good the weather is out there. There was a record in soybean options this week. The other day they traded 213,000 contracts. So there's some activity going on here. China's not going to bail us out of this soybean scenario. The tight stocks in soybeans appears to be over, and it's not going to be around for a while. So I do believe that the demand from China is going to continue at a steady pace, but not the gigantic pace that we've seen in the previous years. They're talking about more acres in soybeans next year here in our great country than corn. That only happened one time back in 1983. So as these grains trade lower, for 4-year lows, you're going to see some things, more soybean acres planted than corn. And I haven't seen that in many, many years. So the wheat market, there is abundance of wheat in the world today. And now you've got good showers, good rains in the former Soviet Union, Australia, and US of A. Egypt bought wheat from USA this week. So Egypt's the biggest wheat buyer in the world today. So that's a positive. They bought some wheat from us here. So we're getting cost competitive there in the wheat market. Going forward next week, what can drive the market? Certainly weather. Keep an eye on that. We seem to be free of any frost and keep an eye on this harvest. But the driving force is going to be the yields that we see coming off the harvesters here. So we'll talk about that. Also keep an eye on the dollar index, as if the U.S. farmer doesn't have enough to worry about. This dollar index of ours just trending higher. That's not good news for our grain market. So if we could get a sell-off in the dollar index, we'll watch and see if that rallies the grains back a little bit. Other than that, have a great weekend. Talk to you next week. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.